Hello and welcome to this presentation, How to Detect and Prevent Employee Fraud. My name is Peter Goldman. I'm the president of White Collar Crime 101 and Fraud Aware. We will begin this presentation with an overview of statistics that paint a broad stroke picture of the seriousness of the fraud problem in general, and then go from there into the details of how to understand the specific types of fraud that are most common amongst organizations of all kinds, and then into the ways to detect the red flags of these frauds, and ultimately how to prevent or at least reduce the risk of victimization by these frauds. So to start with, as I mentioned, we'll talk about the big picture. And one of the important statistics available to us in understanding the breadth and scope of the fraud problem is that released recently by the Association of Certified Fraud Examiners, indicating that $3.5 trillion is lost every year to fraud. It represents approximately 5% of the gross revenue of the average organization. This is an enormous number, obviously. It represents a significant chunk of the world's gross national product, and it certainly emphasizes the importance to everyone involved in business and government and nonprofit organizations of paying attention to the threats of fraud. Secondly, I wanted to share with you a statistic released by the preeminent international fraud investigation firm Kroll. They reported that in the period 2010-2011, fraud jumped by an amazing 20%. Now, you may ask, why am I sharing 3 and 4 year old statistics? The reason is that this is the best indication I have ever seen of the reality that fraud increases dramatically during tough economic times. And you'll recall that 2010, 2011 was actually about the time of the peak of the Great Recession that was triggered by the financial crisis of late 2008. So what we had in this period of severe economic trouble was a double-digit 20% increase in losses of fraud, representing $1.4 million, an increase from $1.4 million to $1.7 million per billion dollars of sales in actual fraud losses. Now, since 2011, that number has come down. We're still awaiting the most recent estimation by Kroll, but it is safe to assume that even though we are still in the throes of a mild, if not technically specific recession, fraud continues to increase, but not nearly at the dramatic rate at which it did following the 2008 crisis. KPMG, the Big Four accounting firm, released a figure indicating that 75% of companies surveyed experienced at least one incident of fraud in the last 12 months. And the average cost per incident of fraud is $160,000. And that takes into account, by the Association of Certified Fraud Examiners, both the low end, sort of low dollar, low loss frauds such as travel and entertainment, expense reimbursement frauds, and frauds like that, which are sort of in the low 20,000s per incident, up to the big frauds, which are the ones that grab headlines frequently, the big accounting frauds, bookkeeping and accounting frauds that can run several $1 million in overall losses. And finally, it's important to note, again from Kroll, that roughly 2/3 of all corporate fraud is committed by insiders. That means that as opposed to some of the more widely publicized and reported frauds, such as those involving the breach of information security systems at large or corporations like Target, where large numbers, multi-millions of records, credit card records, and so forth are stolen by external perpetrators. In fact, the lion's share of all corporate fraud is committed by the organization's own employees.